And what's so interesting about that, and what people don't really see also, is lahat ng large players sa property market, they're all part of larger conglomerates that have been very, very conservative also in running their businesses, and they have a lot of large banks also connected to all of their businesses. So I think that's what makes it so different, that iilan pamilya lang pero nasa kanila din lahat, and you already know the track record of those companies.
If you look at it out, usually the property segment of a conglomerate is usually the crown jewel. Not always, but usually. So, medyo pinapangalagaan talaga siya kasi the returns are big in property. You sell just one unit, you get a lot of returns. So yeah, you would notice na the top conglomerates, the richest people in the Philippines, usually they own real estate companies and they usually really take care of it from a financial perspective.
In this video, we have Josh Garces from To Trade Asia, Gen Z, who's going to give his sense on property stocks. Are they good? Are they bad? How has the new normal affected them? And is it something worth coming into, at least looking into, given the things that are going on? So, Josh, thank you. Welcome to the podcast. Q3, how do you think it will fare on a GDP level first? Of course, our GDP for the second quarter was negative 16.5. Will it be still negative, but not as bad as the second quarter? Or will we be flat or at least start to grow already?
We've been through the worst in the second quarter. So anything beyond that would be an improvement sequentially. So quarter on quarter, better than second quarter. In 3Q, we're expecting it to be better than second quarter, as mentioned, but it's still negative. I think single-digit negative would be for 3Q, but that doesn't factor in yung extra MECQ. So the surprise may be on the impact of the extra month of GCQ for Metro Manila. But yeah, I think it's established na negative pa rin yung 3Q GDP.
Third quarter earnings, who do you think will outperform?
I guess it's not going to be surprising na yung outperformers ng 3Q GDP would be the familiar names nung second quarter, because we're not that far off yet from where we were nung April-May levels na peak quarantine, di ba? So these are household names. Pure Gold, the two telco players, whose operations are mostly undisrupted even with the quarantine set. Siguro meron lang slight surprises and slight improvements on earnings of certain stocks. So for example, we're seeing some sharp recoveries of property. And I think most people would be surprised to say, for me to say na property. But look at how property players are recording income. Diba, kapag walang construction, they won't be able to recognize revenues and therefore not recognize EPS, earnings, basically. In the third quarter, we've resumed construction. So once we resume construction, property players are now able to recognize revenues. So beginning 3Q, we'll be seeing some recovery in the earnings of property players as they recognize revenue. Other considerations for the surprises. I say surprises because I think base level, everybody's still expecting very bad numbers ahead. We're not expecting green. We're not expecting black even. We're expecting red. Possible surprises might be on, again, property, and then some banks might also see some very slight improvements since most of the provisioning has been done in the second quarter. But the downside on the bank side is the Bayanihan 2, which was enacted recently, diba? So part 2 of the loan moratorium will surely hurt credit costs moving forward and loan provisioning. Pero mostly baka makita na natin yun ng fourth quarter. So 3Q, baka mas better.
When you say that the property sector will bank in revenue, what specific segment of the property sector are you looking at? Are you looking at residential, office, malls, industrial?
Residential. Because ito yung mga zero booking talaga ng second quarter because there's no construction going on. From a long-term perspective or even medium-term perspective, residential property is still not out of the woods yet because demand has been really really low. Pero from an earnings standpoint, we're going to see some improvement in 3Q earnings because they started booking revenues from zero in the second quarter. So yun yung parang in terms of improvement, sila yung mag-i-improve.
So the comparison is from the second quarter, not really from third quarter 2019 levels, no?
Correct. And I guess wala naman lang may concern sa 2019 levels because the environment has been really different.
Another thing that I'd like to mention is you mentioned residential. How does that factor in that one of the drivers for the property market also hitting residential are the POGOs? And it's very, very evident that a lot of companies connected to POGOs and their employees that they were housing in residential, a lot of them have left also for at least the third quarter of the year.
You're going to reduce your projected cash flows for companies that are exposed to POGOs. And as you mentioned, it's going to be twofold, the effect. So you're going to take out residential sales coming from them and also office rent coming from POGO offices. So there's that. But I think if you're looking at a fundamental perspective, I guess patagal natin itong hinihintay yung POGO exodus. It's a matter of when. And the pandemic was able to shorten the time.
In terms of the property companies that we have from Ali, SM Prime, RLC, Megaworld, Vistaland, Philinvest, Santa Lucia, etc., who is in this side the most affected? Kasi madami silang exposure sa POGO. Sino yung least affected? Kasi they have other, I guess, income segments that are related to property but not as exposed. And sino yung at least neutral from all of this?
Most affected negatively, I think, would be Vistaland. The pluses for Vistaland, it's in the provinces. The land bank is situated outside of Metro Manila. It's not that affected from, closures. However, if you look at the financials, Vistaland is very exposed to OFW remittances. And that's what's been missing since early this year. So that's going to hurt collections moving forward. But more significantly, take-up. So there's going to be lower OFW take-up, maybe 2021 when they start ramping up again development. Another provincial player, and I think no one really notices it, is CLI. It's not situated in Metro and Luzon at all. So, hindi siya affected ng GCQ ng Metro Manila. In Cebu, construction is back to 70 to 80%, mga ganong levels ng construction during the latter part of the second quarter. So, imagine that when you start 3Q, you're already nearly back to pre-COVID construction. So, that's good for revenue recognition. But also, the Cebu market has been very vibrant. So, I think if you're going to look at two provincial plays that are separate, they're separate because the drivers are different. So FW, and then on the other hand, local Cebu players. And then on the giants of the property, we have Ali, RLC, SM Prime, and Megaworld in the index. All four are different. So RLC is mostly focused on leasing. So that's office and commercial. What sets RLC different in the third quarter relative to the other three index property players are it will book Chengdu sales during the second half. At least that's what we're expecting. The EPS is not going to be comparable to the other three because we're expecting profit booking this third quarter. Now, moving on to SM Prime. SM Prime is mainly driven by malls. And we know that malls are suboptimally operating. So I guess there's not much drive there. But SM, it's not going to be gone for the next few years, even decades. It may be a good time to buy, to start gradually accumulating SM Prime. The same can be said for Ali. But Ali is driven differently. Ali is more residential. And residential has been soft nationwide. So there's that. But again, it's Ali. So maybe gradual accumulation with targeting, maybe 2025 onwards. With Alice Land Bank, there's this great price appreciation there that can be unlocked. And finally on Megaworld. Megaworld is also one of the most unloved in the four property players because I think for the most part, most people see it as a BOGO play, but most people discount that it's a township play. So, and townships are benefiting from quarantines because people are within, commercial areas. It's mixed use, so you don't go out too much, and that's the property that's most desirable right now. Yung away ka from the city center, but still all the amenities are available to you. So I guess that's going to be a big driver for Megaworld moving forward as it decouples from the Pogo issue.
I have three more property companies that I want to ask about, and yung dalawa doon, I think they have a lot of exposure in the Bay Area. I'm talking about Double Dragon and I'm talking about BMW. What's your sense on those companies, especially pag sinabi mong Pogo, Bay Area kagad yung inisip
Correct.
nila, and of course SM is also there, pero they have a larger exposure also outside the Bay. So that one then Phil Invest also.
Ang selling point talaga ng Bay Area for the longest time, for analysts and for value seekers, I think, is the price appreciation it has undergone for the past maybe 5 years. So if you look at it, it's very, the price appreciation has been exponential. Mataas talaga yung increase ng land values over there because of the development. On that end, since meron ng Pogo X2s, ang expectations mo dapat moving forward is to not expect the same level of land value appreciation in that area. That being said, property players who are benefiting from that before are not that desirable, diba? So you have to take that into consideration when you're valuing them. Since a big part of the valuations for property companies is the land bank that's still yet to be turned into actual houses. And then for FLI, another one that's been lagging for so long. I think if you look at the chart, decades yung lag niya. Correct me if I'm wrong, pero ganun siya parang nandun lang siya sa 1 peso, 2 peso range. So, good dividend, good drivers, meron siyang office segments na hindi BPO and hindi Pogo. Filipino leased. So, maganda siya kasi at least you're not exposed to risks that are harming other property players. On the other hand, yun nga, medyo hindi siya love ng investors eh. So, and nalock siya sa ganong valuation. So, you'd have to take that into consideration when you're trading eh. How market sees the stock eh, for the longest time.
For people who's studying the property sector and want to compare companies, what can you say is a good PE already that, okay, pag tumama tong property company na to sa PE na to, acceptable na to sa akin. I think this is already cheap already for me. That's one. Then second, price to book also.
Siguro sa valuations ng property, it's very important to consider that in the Philippines at least, yung mga property companies natin are very unique. Hindi sila pare-pareho. Unlike in other countries na you can really compare their business models, the revenue generation is similar. Dito hindi eh. But you have to break it down to different segments. So for example, si Ali and SM Prime, which are the two biggest property players here, are not the same. Although you can categorize it as diversified property player, their drivers are different. Ali is more residential, SM Prime is more leasing. So ganun siya. So, and when you use PE and PB multiples, you have to consider that also eh. Kasi when you use the PE of Ali, for example, which has been trading for pre-COVID levels, trading for 20 times PE, mga ganong PE before COVID. And then SM Prime was been trading at 30 times PE, mga ganong level si SM Prime. Merong difference eh, and that difference is accounted for by the fundamental drivers. Ali is residential and is therefore more risky than SM Prime. So SM Prime is warranted na meron siyang mas mataas na PE. That being said, ang ginagamit talaga na valuations, if you're going to value property seriously, is net asset value. Lahat ng ari-arian niya, less the debts, you translate it to market prices. So for example, meron siyang land, how does it cost to dispose of this land? That's the value of the land, diba? In terms of PE, you can use PE. Maybe yun nga, yung caveat na you have to remember na some deserve the low PE, some deserve higher PEs.
A lot of people who are watching this, not a lot of them do more in-depth research, and you made a very very good point about net asset value. For those who want to research on that, what do you think kailangan nilang tignan na, okay, pag nakita ko to, ito yung net asset value niya, okay na to. Ano yung kailangan din nila tignan na, hindi to masyadong attractive for me pag ito yung naging value niyo. Yeah, and then siguro another question also for PE naman, given that everyone's expecting EPS to be very, very low this year. How would you give them an analysis on, kasi kung bumagsak yung EPS nila this year, for sure the PEs will all rise
Correct.
next year. So what's your take on that as well? So kunyari SM, you mentioned 30 PE niya, but its EPS, for example, drops by half. So what does that translate to for you? And ganun din for some, just some examples also.
So sa industry, no, ang tawag kasi sa PE and PB valuations is parang relative valuation. In my opinion, I call it matrabahong valuation kasi you have to consider many factors eh. Kasi for example, merong gustong mag-invest sa CLI trading at 6 times PE. Maganda siyang PE, 'di ba? Pero you have to take into consideration na matagal na siya nag-trade sa 6 times PE. So maraming questions that would follow that. Yung 6 times PE na yun, marami siyang considerations before you buy. On the other hand, yung net asset valuation and maybe discounted cash flow, which is used by analysts also sometimes for property companies, we call that intrinsic valuation eh. Intrinsic valuation in the sense na kapag nilabas mo yung number na yun, it can stand on its own without comparing it to other companies. I would encourage you to study net asset valuation because it's useful also for personal use. For if you want to buy properties, you can easily compare companies within certain areas and all that. So how you do it is you try to get the properties of the asset, you take out the debts, and then whatever left, so land bank na natira, ganyan, titingnan mo kung gaano siya ngayon ibebenta. So ang turo sa akin when I was starting was, tingnan mo kunwari, si Ali has 10,000 hectares of land. That's big. That's the biggest land bank in the Philippines right now. If most of that is in Metro Manila, let's say 5,000 hectares is in Metro Manila, and then the rest is provinces, and then maybe a certain number is okay, diba? Pero if the 10,000 is 1,000 lang doon is in Metro Manila, and then the rest is in provinces na hindi naman masyadong accessible, ganyan, it deserves a lower number. So, ganun naman siya titingnan, yung intrinsic valuation, where the property is, how good is it, in terms of, may titira ba dyan eventually, or it can be developed into bigger houses, bigger establishments.
We touched a bit already on the POGO sector. You touched a bit also on remittances, but I want to put everything all together and how will this affect property prices. That number one, hindi lang OFWs yung affected eh. May mga business owners, freelancers, people na may negosyo na naapektuhan, and most likely some of them might not buy property this year, or they have deferred buying property this year kasi some of them, okay na ako sa tinitirahan ko, at least I'll keep my cash muna until mawala to lahat. And then you also have companies na, teka, work from home works. Instead of renting 4 floors or 5 floors, I'll just rent 2 floors na lang. Then also you add social distancing that, teka, because of social distancing, they might need a larger space naman dun sa sa office nila so that hindi dikit-dikit yung mga tao. Then you add the mall component, which kahit GCQ, I don't think it's back to, it's still very, very far from where it is. I forgot to mention, BPO is resurging and it's one of the more, at least stable ones that is providing revenue. And then I add ko rin that yung leisure hotels are not doing so well. Then everything else that I've mentioned. People are still scared that property prices might go lower. Do you see that happening, or do you see everything to be stable still, since yung mga property developers, they tapered off naman dun sa mga new projects nila?
Expect in the near term, there's not much price differences. Basically because hindi masyadong gumagalaw yung supply and demand metrics. Kasi supply is medyo stagnant, tapos demand is medyo stagnant din. And as you mentioned, medyo polarizing yung differences. The pandemic has lowered wage growth, so wala masyadong incomes. On the other hand, those who were able to sustain their incomes now want to enter into property because yun nga, mayroong qualifiers. So mas maganda mag-work sa provinces, mas maganda pag mayroon kang sariling bahay. Mababa yung interest rates right now. Mortgage rates are historically low. So maganda pumasok sa real estate right now. So those are two different perspectives. But I guess it boils down to, and price usually in real estate is lower to be observed, at least from a public perspective, because you're going to have to consider many things. Parang in one place, property prices may rise, because they're benefiting from infra, which we expect to be prioritized by the government in the next few years because of the konti na lang yung years left for the Duterte administration, so they will catch up. Infra equals good property. So there's that. The second consideration would be whether or not this pandemic will be sustained and whether or not the accompanying income erosion will be sustained also. If so, then you don't expect the propensity or the tendency for people to buy real estate to be as high as before. On the other hand, people like me, the Zoomers, are now beginning to be interested into real estate because we're unhoused. We're the unhoused population. So if you're looking from a 10-year perspective na meron pang mga taong walang bahay, then demand will be okay. If you're looking at a 1-year perspective, when there's so much risk in the market, when people are still not going out, hindi ka nga makabisita ng subdivision na, 'di ba, na binibenta yung lupa kasi dapat virtual tours lang, ganyan. So you opt not to because you can't inspect physically. So definitely there's some downside.
As a Gen Z person, analyst, kung ikaw bibili ka, what will you favor more? Bahay sa labas ng Metro Manila or condo sa loob ng Metro Manila?
Pasto na. Provincial.
So I'm seeing a larger shift already of people na
Correct. Ako rin.
na move outside Metro Manila. So do you see that as a trend? A lot of people have been saying that already na because of this, people have been working from home. Instead na mag-rent ako ng mas mataas or bibili ako ng mas mataas na property pero maliit lang yung space ko, di lalabas na lang ako ng Metro Manila para I get a bigger space. Is that the trend? Pero my issue on that is the further you go out of Metro Manila, bago ng internet eh.
Ang tawag ko dyan is decoupling from Metro Manila. So they're going to the provinces. And that's not just because of coronavirus. That's a long-term shift in demand. Because for the longest time, property players have been focused on developing prime real estate in Metro Manila, specifically in Makati, BGC, and in Manila Bay areas. And then once that market has become saturated, more people are buying into that. Prices are going up. And the tendency is for income earners that are not able to afford that to find alternatives. So that's why after that condo boom sa Metro Manila, nagkaroon ng bedroom boom. Bedroom boom meaning yung mga nearby provinces like Cavite, Bulacan, kaya ang daming subdivisions ngayon na dinedevelop during these areas. Now, personally, I think that this is going to be extended to other areas naman. So, after the Metro Manila circuit, so Bulacan, Cavite, extend that to other areas as well. So, Ilocos to the north, Bicol to the south, and all that. Primarily because Metro Manila is becoming not as important as it was before. There's BPO companies, they're now building their headquarters outside of Metro Manila. Meron na ring Cebu IT Park, 'di ba? So there's a decoupling really from Metro Manila because it's congested already.
Last question before nag-request ka ng fast talk, fast talk tayo. Sige, pero ito yung question ko. You said that the trend is headed outside. Should people with long-term projections focus more on companies na yung exposure nila of projects would be outside Metro Manila also, or like what you said kanina, yung mga 8990 Holdings, CLI, yung mga ganun na they have a large concentration of projects that are not in NCR.
So from a stock perspective, kaya maraming may gusto kina Ali, kina SM, kina Robinson's Land is because when they try to buy in land, medyo mataas yung probability that they would be successful in selling the land. So that's one. And then if you're going to compare it to newbies, I say newbies pero matagal na rin sila sa industry, CLI, House, maybe even Vistaland to some degree, yung brand equity nila is not much as the others in developing. So you're pricing in execution risk kasi pwedeng hindi mo mabenta yung house. But we've seen in recent years na na-absorb ng market yung excess na supply. So doing that, maybe if you're into growth stocks in property, maybe those are good bets to lock into, especially if their valuations are really low. I guess CLI is the lowest out of the three, maybe followed by Vistaland.
I'll make this episode Gen Z's Guide to Investing in Property. Parang ganun. Okay, so to put this to an end, since Gen Z, any advice for Gen Zs and siguro millennials na rin that are looking into property stock? Siguro what I'm asking is, ito yung mga kailangan mo tignan para at least alam mo na maganda yung pinapasukan.
Number one, is a big industry. So, hindi siya tulad ng other industries na, okay, bili tayo ng consumer sector kasi maganda yung economy, maganda yung consumption. It's not that. Meron siyang subsectors that have different growth drivers that sometimes one subsector is inversely directional to the other sectors, di ba? So, that's one consideration. You really have to deep dive into what drives the revenues of that property stock. The second is, where is it building? Is it building in a good place na meron ng layouted na infra? Then so maybe it deserves higher valuations. If not, magkakaroon ba ng infra dyan soon? Or is it going to be a special zone? For example, magiging tourist spot ba yan ng government? Magkakaroon ba siya ng specially designated zones? Parang ganun. So that's another consideration. The third consideration is interest rates. Interest rates are important kasi diba, real estate is mahal. So usually you fund it via debt. So interest rates are important because the property sector, maybe above all other sectors, are exposed to interest rate risk. So be wary of that lang. Right now, interest rates are low, so demand is expected to be up for property take up. So that's good for property, but yun lang, be wary if it goes up, which it will. The matter is when. And then finally, look at possible REIT candidates. REITs are going to be very disruptive, I would say, not just for the property sector, but for the entire market as it is. Because if you look at REITs, they are technically just preferred shares with extra steps. And REITs are going to be important because they will offer a much specific place soon. So yan. So meron kang REITs na ito lang siya, and it's easier to study, and it's therefore less risky to get into.
For property stocks, I've seen a lot of their quick ratios to be very, very low. What's a comfortable level for you na okay na to for me? And then second, debt equity ratio, I've seen a lot of them, their multiples are relatively higher also.
I usually don't use quick ratio because number one, hindi siya laging nagbabago in a way. Usually property players, they keep a certain portion of cash and then current liabilities usually stable lang naman yan. Ang nagbabago talaga sa property is inventory, which is tinatanggal mo sa quick ratio, di ba? So it depends on the property player. And I think what's more important is DE, debt to equity for property. Because again, I'm comparing it to consumer again because consumer is straightforward. You produce something, you sell it. On the other hand, property is you produce it, it can stay with you for a long time before you're able to sell it. Also, if you're able to sell it, maybe there's risk na hindi ka bayaran nung other party. So that's a risk that you're going to take. And that matches with the debt to equity ratio. Kasi usually for property players, they keep large amounts of debt just to finance, acquiring land bank, developing property, even though wala pa sila natatanggap na cash flow from their clients. That is a very crucial metric when you look at property. In the Philippines, I would say na wala naman ganun kumbaga, in danger of bankruptcy. If I may be technical about it, if you look at bankruptcy ratios, yung measure of solvency, liquidity, and everything else coming in together, wala naman talagang property player na at risk of bankruptcy, at least right now.
And what's so interesting about that, and what people don't really see also, is lahat ng large players sa property market, they're all part of larger conglomerates that have been very, very conservative also in running their businesses, and they have a lot of large banks also connected to all of their businesses. So I think that's what makes it so different, that iilan pamilya lang pero nasa kanila din lahat, and you already know the track record of those companies.
If you look at it out, usually the property segment of a conglomerate is usually the crown jewel. Not always, but usually. So medyo pinapangalagaan talaga siya kasi the returns are big in property. You sell just one unit, you get a lot of returns. So yeah, you would notice na the top conglomerates, the richest people in the Philippines, usually they own real estate companies and they usually really take care of it from a financial perspective.
And some of them na hindi talaga yung business nila ngayon, yun na yung naging main
Correct.
driver nila. Like DMCI, looking at them from construction, tapos nag-mining sila. Pero ngayon, their property business is one of their largest income drivers also. Thank you so much, Josh Garces. Gen Z, stock analyst from 2Trade Asia. And ngayon,
Walang
ito,
fast talk.
meron. Ito na. Ito yung inabangan ng lahat ng mga tao. Request mo pa. So, ito na. So, SM Prime Alley.
SM Prime.
In terms of upside, condos in Metro Manila, house and lot subdivisions outside Metro Manila.
Outside Metro Manila.
By today, looking into 2022,
Okay.
hotels lagging by that time.
Leading.
Work from home after the pandemic, prevalent still or magbabalikan sa office? Parang di na fast talk na, pero sige.
Blended.
Robinson's Land, Mega World.
Robinson's Land.
Pogo, BPO.
BPO.
Interest rate, go lower, stay at ease.
Stay at this rate, pero eventually moving upward.
Remittances will drive residential businesses or remittances will drop and residential purchases will go down.
2020, remittances down, residential down. 2021, reverse.
Mall, go back to the way it used to be or new normal e-commerce?
It used to be, pero with e-commerce. Parang ang gulo, no? May mall culture pa rin eh.
Pera pag-ibig.
Pag-ibig.
Give me 7 property stocks. Rank them 7 to 1.
SM Prime Alley, RLC, Mega World, Vista Land, CLI, SLI.